Dumela, today we will be looking at example 3, which deals with the reversal of consumable stores on hand at the beginning of the year. And you will note that under the financial position accounts section, we've got trading stock of 800,000. And then we have consumable stores on hand on the 1st of March 2015. And 1st of March 2015 will be the beginning of the current financial year. That simply means that will be whatever we had. It can be packing material or stationery from the previous financial year that was on hand, which is 600. It was unused in the year ended 28th of February 2015. It was unused last year. At the beginning of the year, when we started the current financial year, that consumable stores on hand needs to be reversed. Remember, when we recognize consumable stores, we debit consumable stores on hand and we credit whatever expense or whatever we didn't use that was supposed to have been an expense last year. So to reverse it, we have to debit that actual expense, can be stationery or packing material, and credit consumable stores on hand. That is because that consumable stores on hand we had at the beginning of the year, it's supposed to be used within 12 months because it is a current asset. It was supposed to have been used within 12 months. So the fact that we are on the 28th of February 2016, it means that consumable stores we had at the beginning of the year is used up. There are no second thoughts about it. It has been used up. So when we use up the consumable stores on hand, it's expense. It changes from being an asset to being an expense. All right. And they tell us that under adjustments, the bookkeeper did not do the reversal of adjustment for consumable stores on hand at the beginning of the year. That is why we have it in the trial balance. Then they say the consumable stores on hand consist of stationery. Oh, that's what this is made up of. Highlight that, stationery. We know that consumable stores on hand is made up of stationery that was unused in the previous financial year. Reversed adjustment. So obviously, in the current financial year, that will be used. Okay. I am going to start by recording the reversal. I will record it in the general journal. Remember, this is in relation to consumable stores on hand, which is the stationery that was unused in the previous financial year. We will debit stationery because we will recognize that as an expense. This is unused stationery from the previous financial year. So there is no way that it was not used during the year. We have to start by using what we had from last year, and that will have been 600. And then we are going to credit consumable stores on hand because this asset wasn't in existence for the entire year as this was used. Remember, consumable stores on hand relates to an expense that has not been used, and it was used because it was unused in the previous financial year. So this is the reversal of stationery at the beginning of the financial year. Note that this affects your consumable stores on hand. I will actually do that later on. When I do the general ledger, I'll just do the whole general ledger as it is. Let me go back to the actual question. Point number 2 says Stock with a retail value of 525 was delivered to the store on the 28th of February 2016. So meaning that we actually purchased the stock, and we know the retail value, which is the selling price of the stock, was 525. So we were going to sell it for 525, but we bought it. And remember, when you buy trading stock, I did mention it in the previous videos, you are going to recognize it at cost price. Remember that. However, here we are only given the retail value, which is the selling price. We know that Kenneth marks up its trading stock at 50% on cost. The transaction was not recorded. How do we record this? Normally, they were supposed to tell us if this stock was purchased on cash, for cash, or it was purchased on credit. Was it purchased for cash or was it purchased on credit? If it was purchased for cash, it will be recorded in the CPJ. If it was purchased on credit, it will be recorded in the creditor's journal. Obviously, under bank in the CPJ and trading stock, and in the creditor's journal under creditor's control and trading stock. I will record this in the general journal because we don't have the CPJ or the CJ in this case. We know that our trading stock will go up. When it goes up, though, it's an asset. It goes up on the debit side and it goes up at cost price. We were given the markup and the markup was 50%. We are either going to credit bank or credit creditor's control. We credit bank because money is going out, or we credit creditor's control because the liability is going up. And when a liability goes up, it goes up on the credit side. Bank is going down because it's an asset. It also goes down on the credit side. We were not told how these goods were purchased. So that's why I've put bank / creditors control. Okay. Let's go to the next one, which is the last point. They said to use stock count on the 28th of February 2016 revealed the following on hand. Trading stock, it includes stock that was mentioned in item 2, which was that stock that was purchased. So that was counted. So in total, our trading stock counted will be 770,000, including that 350. And then they said stationery, it's 800 and packing material is 1,500. These are unused for this year. So stationery and packing material will make up what we refer to as consumable stores on hand. Let's start with that trading stock. How are we going to record it? Trading stock in the trial balance. Please note that it has actually increased. It was not recorded at the correct value. It was recorded in the trial balance. It is given to you as 800,000, and that was wrong because there is one transaction that was not recorded, which relates to us purchasing trading stock, and they gave us the retail value of that stock, which was 525,000. We needed to calculate the cost price of 525, not 525,000, sorry for that. We were supposed to calculate the cost price of 525, and it gave us 350. We are going to take that 350, add it with 800,000, because that's what we have done. When you recorded this in the trial balance, this is what we have done. So the correct value in the trial balance, our trading stock should be sitting at 800,350. However, as per the stock count, our trading stock should be at 770,000, meaning that the one in the trial balance is still incorrect even after adjusting it. So we need now to recognize what we refer to as trading stock deficit. How did I get that 30,350? All I did was to take 800,350 minus the 770,000. To record this in the trial balance, we are going to debit trading stock deficit and credit trading stock. We debit trading stock deficit because that is an expense. It's a deficit, it's an expense. We credit trading stock because our trading stock was sitting at 800,350. It needs to be taken down to 770, and we are taking it down by 30,350. That reduction of your asset will result in your asset being credited. When it comes to consumable stores on hand, my consumable stores on hand is an asset. It will be debited. Remember, it was 800 plus 2,000. It was 1,500 if I'm not mistaken. So when you take 800 and you add it with 1,500, it'll give you 2,300. This is that stationery as well as packing material that were unused at the end of the current financial year. At the end of the current financial year, they told you that these were unused on the 28th of February 2016. Stock count on the 28th of February 2016 revealed the following on hand, which is these over here. All right. Now, when I record this in my general journal, I will simply add that 1,500 with 800, it'll give me consumable stores on hand. This is what I have when it comes to consumable stores. Consumable stores being your packing material and stationery that were unused. It'll give us 3,000, 2,300, that is. Your packing material will decrease. At the moment, in your trial balance, your packing material is sitting at 3,500. That cannot be expensed as it is. We need to subtract the unused. That relates to packing material that was purchased. We need to minus packing material that was unused so that we only left with an expense. And as I've said, the expense will be packing material that has been used. That's why we are going to credit packing material by that 800. Was it 800? Let me just check. I think it was 1.5. Yes, I'm right. It was 1.5. So we are going to credit packing material by that 1,500. And at the same time, I will have to credit stationery by 800. Be careful when it comes to your stationery because you might be fooled by thinking that the stationery that we have in the trial balance, it is the only stationery that we've got. No, remember there was stationery that was unused in the previous financial year. The unused stationery from the previous financial year will form part of your stationery expense in the current financial year. Let us look quickly at the general ledger. I will start with the financial position accounts section, starting with trading stock, obviously. Our balance of trading stock at the beginning of the financial year was 800,000. Well, not at the beginning of the financial year, at the end of the financial year, that was in the trial balance. Remember, this is all happening on the 28th of February. Still on the 28th of February, we bought stock, okay, worth 350. So that will increase our trading stock on the debit side, okay? And then it'll decrease by trading stock deficit. Of 30,350. Stock left will be 770,000, which is equivalent to stock we have in the warehouse. And that's what we are going to start the new financial year with. We'll start the new financial year with stock worth 770,000. When it comes to consumable stores on hand, we had balance brought down of 600. That should be reversed and put into the stationery account. This is what the bookkeeper failed to do. So now we no longer have consumable stores on hand at the beginning of the financial year. We should only have consumable stores on hand or that relates to expenses that were unused in the current financial year. At the end of the current financial year, packing material unused will be 1,500. Stationery unused will be 600. In total, that will give us a balance carry down of 2,300, which is our consumable stores on hand that we will start the next financial year with. Packing material for the current year will be the balance we have in the trial balance, subtract the unused packing material of 1.5. Our packing material that will go to profit or loss account will be that 3,500 minus 1,500. Remember, only actual expense incurred will go to profit or loss account, and the actual expense relating to packing material will be 2,000, which is packing material that has been used. When it comes to stationery, we will start with the stationery that we have in the trial balance, which was 15,000. This is not all. To this 15,000, we're going to add what we had from last year, which is 600. And that will be your consumable stores on hand from last year. And then we minus consumable stores on hand that we have at the end of the current year. It'll give us stationery actually used, which will be taken to profit or loss because it's an actual expense, and that will be 14,800. We will not have balance brought down here. I don't know why I included that. Apologies for that. And then we will have trading stock deficit. Trading stock deficit is an expense. Expenses go up on the debit side. The contract count will be trading stock, but this actual expense, we are going to take it straight to profit or loss account in the general ledger, and that will be 30,350. In the statement of profit or loss and other comprehensive income, we will have trading stock deficit. Note that you need to show workings in brackets by taking 800,350 minus 770,000, and our trading stock deficit will be 30,350. And for packing material, we had 3,500 to minus what was unused, and the unused component was 1,500. It will give you the actual packing material used, which will be your expense, and that will be 2,000 Rand. Stationery, you will start with what we had last year. You add what we purchased in the current year. And then you minus what we didn't use at the end of the current year. So it will be made up of 600 at the beginning of the year plus 15,000 that comes from the trial balance, which represents net purchases of stationery. And then you minus 800, which is your stationery that was unused at the end of the current financial year. Stationery used will be that 14,800, and that becomes your actual expense when it comes to stationery. Now, the unused part, which is that 1,500 plus the 800, will be recorded under inventory as consumable stores on hand. In total, our expenses will amount to 47,140. It's 47,150. In the notes to the financial statement for the year ended 28th February 2016, trading stock will be as per the stock count of 770. Our consumable stores will be made up of, consumable stores on hand will be made up of 1,500 plus 600. And that will give us 2,100. Adding your inventory up will give us 772,100. Try classwork 1. Prepare this. Okay, it's moving ahead of its time now. Prepare this. The general ledger accounts. Including trading stock deficit or surplus. Statement of profit or loss. And the inventory note. Please don't forget to subscribe. Click on notification so that you can get notified whenever I post videos. Also,